Happy Monday. We welcome you to Trading with Technical Indicators. My name is James Boyd. Today's topic is really focusing on mastering the bounce trade. We'll talk about that here in just a moment. We'd like to welcome all of you here today. Hopefully you had a great weekend. It was, near 60 degrees or 60 degrees in Salt Lake City 3 days in a row. It was unbelievable. So if you see a little sunburn on my face, that's why. We'd like to welcome Jessica with us, Bill, or Mr. Barnhoff. Will, back at you. Papa 0625, Debbie, and many others. Grace, hello. And we also have Michael Fairborn in the chat. Now, you can follow Michael Fairborn and myself on X. We do post educational content and announcements there. Mike will post his link there in the chat. That way you can click on it and just give a quick like and follow him as well on X, formerly known as Twitter. There's my handle. You can see it right there as well. Now, just real quick as we hop right in, this class is really focusing on really buy and sell signals, okay? And also what indicators might be used to look for, let's say, setups, whether it's entries or managing a position or exiting a position. So we're talking about buy and sell signals. Now, also remember when we talk about examples, the information we discuss here today is provided for general informational purposes only. If we do bring up options, okay, so we do a mixture of stocks and options. If we bring up an option example, just remember that options carry a high level of risk, not suitable for all investors. Also understand when we talk about the paid money software application, that's done for educational purposes only. So the Thinkorswim platform, they have a real platform, and also they also have paper money where you can practice with fake money, okay, or it's not real, right? And so just know that you can access both of those with the same username and password. And also remember that investing involves risk. Now, today, what we want to do is talk about mastering a bounce trade. I'm going to give a number of examples to begin with. But before we actually hop right into those on the daily and the weekly charts, I do want to bring up just kind of some of the things we're seeing in the marketplace and where are we seeing those bounce setups, okay? Now, before we actually hop into the first chart, I want you to think about how many bounce trades do you think you've seen in your lifetime? Hundreds? Thousands? You ever had something that you missed? Okay, you just forgot, you weren't paying attention, whatever it was. Maybe you doubted that it could really actually go to the upside. How many actually bounce entries do you think you're going to see in your lifetime? The answer is a lot. So this is not an area that you say at 0 would be I have no understanding, and 10 being I get it. This is not an area where you probably want to be a 2 out of 10, okay? Because it could actually have some effects on riding the trend and trying to push up your overall portfolio and thus thwarting, okay, the chances of reaching your financial goals. Now, what I want to do here is let's pull up the Thinkorswim platform for just a moment. And what I want to do is let's pull up just a couple charts. Now, I'll share my charts with you in just a moment. The first thing I want to kind of take a look at is kind of some prices first off. Now, I know from Friday, our discussion, kind of had an interesting discussion on gold and silver. I just want to take a look at a couple prices just quickly, okay? So gold, just real quick, if we said, well, what's gold doing actually here today? We mentioned that gold was actually getting a little push. Now, this is going to play into the examples that we talk about, okay? This is classic top-down analysis. We're looking at prices, we're looking at indexes, we're looking at sectors, we're looking at industry groups, those four, and then saying where the bounce is likely going to come from, okay? What we see on gold is we see this move down, move back to the upside, and a little fall back down. Now, we didn't see this low go as low as this one. Have we been showing an example of a bounce? And the answer is yes, we have, okay? Now, I want you to notice on this first bounce example, and we're just going to show this and we're going to do individual stocks. We see a red candle. I'm going to put that as 1. What you're going to notice is on Friday, I'll label it as number 2, we did not close above that day 1 high. We didn't do it. But today we actually saw that there was a little gap in the price, and that's what we call CHG, okay? Close higher gap. Now that's a way to get a bounce setup, okay? Now who made that? I did. When did I do it? Probably back in 2005. When you go back and look at bounce setups, they're usually going to funnel down into two main type of setups. Remember this first one to begin with. The one thing we would say just real quick with gold is we actually have that classic close above the higher, close higher gap setup. If we close here, let's say on gold itself, we would be closing above that red candle day high, which is now turning into what's called CAHOLD, CAHOLG, close above the high of the low day. Don't worry, we're going to get some practice. So the biggest actually thing is we're seeing a bounce actually in gold. Silver, it is, but it's not gone up as high. We mentioned that some investors might be a little bit more bullish gold than silver. Silver's bouncing, just not in the same magnitude. And we did actually make a brand new low there. The other spot that we're actually just going to keep an eye on, which we've talked about really on Friday, is in crude oil itself. Crude oil prices, again, what does this have to do with stocks? Well, because if we're looking at the energy sector, they're not selling soap, okay? They're selling oil, they're selling natural gas, and so on. If you look at this, we're kind of forming an upward trend, and we're making some higher lows. And those higher lows look like they're getting higher, and we're trying to break up through the resistance. We'll show the energy sector here in just a moment. I do want to make mention of the US dollar here. And if you look at let's say the US dollar, what you're now going to notice is the US dollar really kind of dropped down a little bit, okay? Causing some other areas to maybe increase. Like what? Well, like gold, like silver, like commodities, like what else? Anything else that we're missing? Now, if we're multinational companies selling our products overseas with a cheaper US dollar might be attractive for the people that are buying, okay? So the biggest actually thing is, let's kind of now talk about, let's say, what we see in the indexes, just briefly. Well, the NASDAQ, I think we could say at best is neutral, at best, okay? When we look at the NASDAQ, that's not telling us everything about the neighborhoods, but I'll just pull up one neighborhood example given. If we look at the stocks, you're going to see that the semiconductors have actually done better, okay? We've struggled to get above the moving averages. Today, well, Friday we closed above it. Today we opened, and if we close here, we'd be closing above it. This is the first time that we've actually seen a pullback and a little bounce where after the cross down, which we saw really on February 2nd, first time we've seen where we've started to move back up, and we're now starting to get on that shorter term moving average, that green moving average, a green line, okay? So this is the first indication outside price, hey, that stronger movement in stocks. Probably the stock to watch there today is On Semiconductor. They got earnings after the closing bell. Now, what about the Russell? Well, this had been the diagonal line that we talked about, and you're going to see that the Russell is probably performing one of the stronger signals that you can get if you're a bull. What do we mean by that? Well, if you go down below a support level and investors come in and buy below the support level, why would someone be buying below the support level? Simple answer. They think they have enough ammunition of capital to knock the trend back to the upside. Okay? Now, what did it do? Well, it went down below support level for a day, and the shorter in duration it is below the support, before firing back to the upside, the stronger the upside potential move. Smaller caps getting involved again after pulling back some. Now, a lot of times when people see things go up and they pull back, they'll say language like bear, bull trap, bull trap, bull trap. Bull trap, they talk about that as if it goes back up, wonder if you get in. Don't get in now. Wait until we get to the all-time high. Bull trap doesn't make a whole lot of sense unless you're talking about something that really broke down on an intermediate basis for the most part. If you pull up the Russell, and we're not even breaking down below the 30, 50 period moving average, saying things like a bull trap, not the greatest comment, okay? You got to understand that some people like to buy closer to support, and their risk might be lower anyway, even if they're wrong, okay? So waiting to buy at the all-time high, that's actually then taking the investor down the path of, well, if I buy at the all-time high, now I'm too late. I should have bought when it bounced, but someone told me bull trap. Look, the person that says bull trap, they're probably late in buying anyway, okay, on average. And I'll show you that in just a moment what we mean. Now, you might be noticing these green dots on the chart. Don't worry, we're going to come to that in just a second. Now, I also want to kind of just make mention of Dow Jones. Happy 50,000 to you. I personally remember when the Dow was at 5,000. You remember that, right? Okay. Here we are at 50,000. Hello. Okay. Now, it doesn't matter how high the index goes if the investor's not in. Now, super quick on sectors. When you look at base materials, that's almost a brand new high on base materials, okay, which shouldn't be a complete surprise given what we see in precious metals. The energy, we talk about oil, shouldn't be a surprise to see energy actually going up. And also, it shouldn't be a surprise to see industrials go up. When we say industrials, we're saying transports. And the ones that we're going to keep an eye on this week are, let's say, the financial space. Can they finally get a reversal? We know the regional banks have actually been stronger. Can the commercial banks get back involved? Okay. So when we start this week, now the one thing I did not make mention of, I made mention of, let's say, the S&P 500, and let's just show that chart, but I want to kind of follow through on what we said on Friday. And if you look at, let's say, the S&P 500, neutral-ish like the NASDAQ, but the area that's been a little bit stronger, talk about this on Friday, small caps, mid caps, large caps, where we are seeing a little bit of strength there is in the mid caps. Mid caps will probably be right around that $5 billion mark. That is actually a brand new high in mid caps, okay? So remember, people buy different things at different times, okay, for different reasons. Now, what I want to do is I want to pull up some examples of what do we mean, and I want to draw this up first off, okay? So let me draw this up for just a second. So when we talk about, let's say, a bullish bounce, okay, and I want you to be able to, like, if someone said to you, hey, explain to me what a bounce is. Why does it matter? Well, I'm going to use the color green signifying that the trend is going to the upside. So this green candle represents that it's the price is going up, okay? Now, then all of a sudden, I get that to actually go up again. Let me actually go back. Okay. Go back. Let me use this one. There we go. Okay. Now, this represents a candle, right? Green candle for bullish, goes up, and then all of a sudden, let's say in this case that the price starts pulling back. We know what that color is, red, and then red. Now, before we even kind of look at that bounce setup, the foundation for any bounce setup is the investor is really wanting the P, the price, above the support. Now, what is usually acting as support? Well, for most of us, we probably say that that support is a moving average. Now, not all of us are the same, okay? When we say the support, okay, we're saying a moving average. You define what moving average it is for you. But if you ask me, and nobody was here, well, let's just say for us, that moving average would be a 10-period moving average. Why the 10? Well, the 10 is shorter term. It's trying to get the momentum. But if you're above the 10-day moving average, it probably tells you there's some type of trend. The biggest thing is that there's price momentum. So here's the thing. It doesn't matter if we have a bounce if the P is not greater than the support. Now, let me ask you a question. What is that support for you? Is it a horizontal? Is it diagonal? Do you like any certain moving averages? Type that in for yourself. I told you which moving average I like, okay? So let's say all of a sudden, say price goes up, green candles, and all of a sudden we get a pullback. Now, I'm going to tell you right now, when the price pulls back, a lot of times we get sad face. And I'm going to tell you, if you don't learn to overcome that, you're going to tend to be late in getting in on the bounce because you're letting your emotions mess up the entries. So in other words, what we need first is price above support. I'm going to put that as number one. Do we have price above support? Number one. Number two, was there recently some green candles. All right, 1, 2. What comes next? 3. You're now going to see, well, in this case, now we get red candles. Now, if we have the price above the support. Second, if we've had some green candles lately. Third, red candles. Now, what I want to kind of change our mentality with is when we see price above support, recent green candles, then all of a sudden we see red candles. This is not sad face. This is the opportunity to say, come on down and get a little bit closer to the support, which might be the moving average. Without that pulling back, we don't get that maybe lower entry price. Do you get it? I need to know. Me and you need to have a little come to James meeting right now. Do you understand that? If we don't understand this, this is why you buy late. This is why you're trading on emotion. This is why your entries always tend to be high. You tend to make very little, and you're always typically underwater. How do I know that? Because that's what I did when I first got started. We didn't have any coaching back then. Now, the biggest thing is when we take a look at this, all of a sudden we want to ask ourselves, of these red candle days, which one is the lowest? And if the second one is the lowest, then the entry of this is going to come off the lowest red candle. We're looking for actually the price to actually trade and or close above that second candle. So the question we ask ourselves is when we get the red candles, which one is the lowest? Okay, number 2. And then in this case, do we trade or close above that high of that second candle? If we actually do, that's what's called CAHOLD, close above the high of the low day. We could also think about that as a bullish bounce setup. Who made that? I did, probably back in 2005. People historically call it a bounce, but really when you look at the patterns of a bounce, which we're going to show some examples right now, really it comes down to is CA, close above, or TA, trade above. TA, trade above, that could be in the morning, middle of the day, end of the day. If we say close above the high of the low day, we're talking about in the last 90 minutes. Last 90 minutes. Okay? Now, if you said, James, could an investor use CAHOLD and CAHOLD? Yes. Sure. Now, the biggest actually thing is there's some tools that we want to make sure that we actually have where we can actually see this. Number 1 is going to be on the Marketwatch. I'll just label as MW. And also the second tool is actually going to be on the charts as well. Now, the Marketwatch is just like a list. Okay? The charts is where we literally have the ticker symbol on the chart, and it's going to show it in the form of green dots. So this is not where you have to become, my gosh, I don't have the experience. You don't need the experience. You actually need to actually have the tools on the Marketwatch and the charts. Now, I want to go to kind of show you this on the charts of what it looks like. Now, with what I just made mention to you, let's kind of just visually show a couple, okay? And if you don't mind, now don't worry, we're going to pull up a number of examples here. I'm just going to label, whenever I see red candles, 1, 2, 3. Now, just to make sure you're following along and you're not multitasking, which one of those days is the lowest, most recent red candle all the way to the left? Now, I gotta tell you something funny. Thea kind of makes mention, patent pending on trademark. I went to go and renew my driver's license. You know, you got to check your eyes. I put my head in that little thing, and I swear on my life, it said CAHOLD. And I thought, is this person pranking me or is this for real? I swear on my life. I told them, I said, you haven't watched any of my classes online, have you? They're like, no, I don't know who you are. I said, okay, let's just, it was definitely funny. I did pass the test. Now, here's the deal. If we said which one is the lowest day, it's actually 3, right? So this day right here, that's not a bounce entry. That's a start of it, okay? But that's not CAHOLD. This day right here, what you're going to notice is that there's a green dot on the chart because it's showing close above the high of the low day. The closing price of that is higher than that high of day 3. That's why there's a green dot. You're now going to notice that when the price runs to the upside. Now, remember what I said before. What was the first thing we actually said? We want the P above the moving average. Okay? Remember we said that? Price above the moving average. What was the second thing that we wanted? Oh, we wanted red candles. Now, I'm going to tell you what has faked me out earlier on is, a lot of times people say, well, I want red candles. I want a deeper pullback. Man, be very careful when you say that, okay? If the stock is really trending, you're not typically going to have deep pullbacks. You're probably going to have pullbacks of 1 to 3 days. Now, I know you're thinking, well, I want more days, so, I'm just it's more comfortable. Well, the problem is when the trend is really going up, it doesn't take a whole lot of time for it to pull back, and investors are eager to get in, okay? So think about this like real estate. You're the listing agent of this house, and you just put it on the market. And in one day, it has an offer. Oh, wow. And then you list another house. 2 days later, you get multiple offers. 3 days, let's say another house, you list it, and within 3 days, man, there's multiple offers for it, and even above asking price. Well, what does it tell you about the sentiment of the houses or the price? It's solid, okay? There's some interest here. Well, it's the same thing really goes back to stocks. So when we only see it goes down for 1 day and then green candles, which are buys, come in, why is there a green dot right there? Well, we're closing above or trading above the high of that lowest red candle. Why is there a green dot right there? Well, because we're actually closing above the high of the red candle. When we actually went down, how many red candles did we go down for? 1, okay? Now, this right here, what you're going to notice is this one right here is a little different. Notice that we have an RC red candle. Does everyone see that? And then we get this green candle. I'll just put a little X right there. Do you notice how on this X on the day of 2/5, do you notice that it does not trade above or close above the previous day? Does everyone see that? Now, this is very important because I want to make sure we're crystal clear. That candle right there does not trade above the previous day's high. That is what we call the CH, close higher. And you're going to notice, what does it do the very next morning? It gaps, okay? It gaps the next day. Now, when we take a look at this, so when we talk about the 2 types of setups, and I'm telling you, if you don't understand this, you're going to miss a lot of opportunities. Now, the funny thing is, a lot of times the stuff's right in front of our face, but we can't see it. The purpose of having these dots on the chart is to help it so we see. I mean, I don't even know what I'm looking at, but I got green dots on the chart. They're telling me that's a bullish bounce setup. Now, does that guarantee the stock's going to go up? No. Any risk has entry. But it's just the fact it's telling us, hey, the chart is showing a bounce setup. Those 2 bounce setups, close above the high of the low day, hold. Second, close higher gap. When someone looks at a gap, when are they trading that? Usually in the first 90 minutes. Now, could it gap to the upside and then go down? It could, okay? Wonder if you wait until the end of the day, does that guarantee it's going to go up? No, it can go down the very next day. It's just showing it's a bounce entry, okay? Now, I want to first kind of just hit this real quick. How do I actually get this on the chart? Let me share this chart with you real quick. If you're watching this on recording, definitely I'll share on the description of the video. So this right here I just sent to you in the chat. So first off, how do we put this on? Well, if we go to the very top right, go to setup, and then what we're going to do is go to open shared item. Now here's what's nice about this. It doesn't matter if we're using an intraday chart. It doesn't matter if we're looking at this on a daily chart. It doesn't matter if we're looking at this on a weekly chart. It doesn't matter if we're looking at this on a monthly chart or any product. It's going to show it, okay? So if I pulled it up on gold or silver or euros or let's say Cisco stock or Amazon stock, it doesn't matter. It's going to show the dot. Okay, now let's go to open shared item. How do we do that again? Set up, open shared item, just copy and paste what I sent to you in the chat. Okay, now I'm going to show that weekly chart in just a sec, so how it plays out on the weekly chart. Because I know a lot of us might not invest our whole portfolio by looking at charts on a daily basis. So that's why I said that comment, okay? So I copied and pasted that right there, and I said preview, okay? Now, if I go preview, and it looks like someone wants to share a chart with me, import that bad boy, okay? Import. Now, if I import that, where does the chart go? Well, the chart really goes right here. And so, well, let's maximize that. Let's click on that right there, click, and there's this single chart. Now, let's do this together. How do I save it? Let's go to Style and say Save Style. All right, that's not too bad. And let's just call this CAHOLD chart. All right. Now, when I do this, if I go Save, where does it go? Style, Load Style, and you're going to see there's that CAHOLD chart right there. That wasn't too bad. All right, now, let's also go back to now. Let's say, for example, given, let's talk about the weekly chart just real quick. If I looked at a weekly chart on this, let's kind of show what this looks like. If I looked at a weekly chart, now how do we go to a weekly chart? Well, let's go to where it says D for day. This is 1 year daily chart. Every candle represents 1 day. Let's go to a 3-year weekly. It doesn't have to be a 3-year weekly. We can do 2-year weekly, but it's just the default. But let's kind of show what this looks like even on a stock like Johnson & Johnson. Well, those dots are showing the same. I'm going to circle the lowest, most recent red candle and then where the CAHOLD dot was. And you should practice this. Circle that lowest, most recent red candle and then identify where that CAHOLD is. If you actually said, how come this was not an entry? How come that was not an entry? Because it never closed above the high for the week. Circle the lowest, most recent red candle. Where's the entry? Right there. Circle the lowest, most recent red candle. That one, not this one to the right, okay? Where's the entry? There. Circle the most recent red candle. Where's the entry? How come this one is not an entry signal? Because it didn't close above the high of the low day. Which one of these is the lowest day? Day 1 or 2? It's 2. Circle the lowest red candle, and then where's the entry? Now, let's kind of speak to this just real quick. But where does the trade go wrong? Simple answer. What you're now going to notice is these dots, okay, can also tell us something about if I connected these dots. If I connect these dots like a kindergarten kid would, I got 2 grandkids, so I know all about this. I've been watching lots of Bluey with grandkids over the weekend. So if I look at this and I go dot to dot to dot to dot to dot, and those dots predominantly are higher, well, that tells us there's been an upward trend. That we could also say higher low dots. And if those higher low dots are creating an upward trend, those bullish bounces are leading to that upward trend. Now, but where does the trend go wrong? Where does the bounce start to break down? The answer is if you start to close or trade below, well, let me say it like this. If the investor said, James, I took in the entry right here, okay, where that X is, and all of a sudden we actually start to trade below the open of that bounce day, I'll repeat that. If we start to trade below the open of the bounce day, that's actually now showing us that that bounce is starting to fade and we're now at risk of starting to break down. That open of the bounce day, example given, if I use this in yellow, if we were to start to go lower than that, this is where people are probably setting their stop 2 to 3% below support and setting their stop. Does that make sense? So if you ran to the upside and all of a sudden you just broke down, if you go down below where the bounce day was, that's not a good sign. So that's why people would typically say, where's the bounce day? Draw a horizontal line at the open of that day, and their stop most likely could be right underneath there. Now, here's what I want to give you a little test, okay? One of the things that you could actually do on this chart, let's go back to just another chart, and I want to go back to a stock. Let's go to ConocoPhillips for just a moment. How do we go back to the daily chart? We're going to go from weekly. We're going to go to 1 year daily, okay? These are just some sample defaults. Week to 1 year daily. Now, if I do that, I'm going to just kind of zoom in, and now there you go. Now, let me kind of show you something here for just a moment, okay? If we take a look at, let's say, ConocoPhillips, I want you to think about how good your recent entries were. So one of the things you can do on this chart to help visualize and check where were your entries. So how do we do this? Well, you see this test tube right up top? Click on the test tube. And if we click on the test tube, you're now going to see where it shows, we're going to go down to where it says chart label. Okay? Let me show that again. Click on that test tube. We're going to go down to where it says chart label. And just to the right of this, we're going to click on that gear. So nice and slow. Little test tube. Okay? Chart label. And click on the gear. Now, what we're now going to see is, in this case, is if I clicked on the right one, no, you know what? Take that off. Yeah, right above that. Sorry about that. Whole right above that. Okay, where it says bubbles, you're gonna see why we call it bubbles. Click on it. Now, if we do that, and I'm just gonna kind of isolate that so you can see what we clicked on. Click on the gear. Think it's settings, and let's go show bubbles. Okay. What do we mean by bubbles? Well, it's going to number those CAHOLD days for us. Let's go show bubbles. Go yes. Now, what is that going to do? Well, we're going to check to see how good our entries were. So now if I actually go back and say, okay, apply, and then okay. So let's imagine someone says, James, I got in, and I'm going to just kind of use an example given of a stock like ConocoPhillips. So what you're now going to notice is the reason why we call them bubbles is R is one, where it's red, second day of red, third day of red, fourth day of red, okay? So all of a sudden when we actually start to have, let's say, an entry setup, well, now you get one, okay? And all of a sudden, if you take a look at this, I want you to go back and look at your chart using this label, and I want you to see on average, what day are you typically getting in? Because if you said, James, I'm averaging day 6 or 7 or 8, then you know what the next question is. Why are you so late? I mean, I thought the goal was you're trying to buy close to support. You have been buying close to support. Now, this now begs the next question. Why I kind of buying late because maybe I'm trading off emotion, but this puts it in our face of helping us see what day of that green candle we're getting in. Well, but I'm late because I struggle to find the setups. Well, not now, okay? So here's the thing is, but how do I find it on a list? I mean, that's the question. How do you find them? Well, what we're now going to do is I'm going to pull up, let's say, the Marketwatch. And so first off, we spent some time talking about the CAHOLD on the chart itself, okay? Now, what I'm going to do, I'm just going to use example given. We're going to go to Marketwatch, tell the software, what is it that we're trying to look for? Well, one of the things we've been talking about here today is mastering the bounce. We're trying to find those bounce setups. Well, one of those bounce setups, scans, if you will, on a list is labeled really T/CAHOLD. The T/CAHOLD really is meant to be trade above the high of the low day, meaning intraday, or close above the high of the low day. Anything that is in black with 0 means it's not meeting the criteria right now, okay? Now, if we pull this one up, what you're now going to notice is what is the green with number 1? That green with the number 1 is saying it's meeting the criteria. Now, these scripts, think of a way to search. They're not guaranteed for accuracy or timing. That's why you need to have a mental understanding to verify what you're actually seeing on the list. Okay, now here's what I need a little help here, okay? Now, if we looked at this Dow stock without even looking at the charts, we can see which ones are actually CAHOLD and which ones are, for example, above the 10-period moving average. This column trend is telling us which stocks are above the moving average. Anything that really has a number 3, number 3, number 3, number 3, These are the stocks that have those trends that some of those bullish investors are saying, Mama Mia, okay? These have been some stocks that have actually had some fairly decent trends, meaning the price is above the moving average without even looking at the chart, okay? I don't have an easy button here, but if I had one, I'd be hitting it, okay? This trend has really helped saying, hey, which stocks are actually above the moving averages? If it shows green background with number 3, it's above the shorter term and intermediate trend, okay? Or moving average. Second, if we see on stocks like Honeywell showing a CAHOLD, if we see Cisco showing a CAHOLD, Boeing showing a CAHOLD, Caterpillar showing a CAHOLD, Goldman Sachs showing a CAHOLD, Triple M, CVX, and JP Morgan. We didn't have to look at a single blasted chart and we could see which stocks actually are above a certain moving average or 2 and which ones are showing bounces. Now, I don't want you to leave this class without having this. Now, if I right click, for example, right click on the column heading, edit formula. I'm going to actually send this to you right in the chat as well, so that way you can have that. And now what you're going to notice is, okay, I'm going to actually go to this right here, put it right there. Now, what I want to do is I want to mix it up just for a second. I want to imagine that we want to take what we learned and then apply it to like a new list of stocks. What if I said I want to see precious metal stocks? Well, let's go back to our precious metal list, and we made it historically. We can make another one, it doesn't matter. But if I go to, let's say, a personal list, and I said, look, I just want to look at a small list of stocks. This is going to be like you saying, hey, I put together a list of stocks and I want to see them. Well, what I'm going to do is I'm going to put together this we put together this precious metal list a couple weeks ago as an example of some precious metal stocks. Now, remember what we said, and let's go into the trading examples now. If we looked at this column heading, we're going to look at, let's say, number 3 for which stocks are above, let's say, the moving average, namely the 10 and 30 period moving average. Really what we want to see, perhaps, is the price above the 10 period moving average. Now, sometimes if there's strong momentum and trend, we could get a number of these stocks, in this case, showing trade above the high low day or CAHOLD. Now, this is in the area of precious metals, okay? And number 1 is it wouldn't take you too long to actually make the same list or close to it. Super quick, just go to scan, go to scan in, and we're going to go by industry, materials, and just say metals and mining. If we did that and said, just give me scan, the list of stocks that comes back, all we did is we just made that into a watch list. Scan in, by industry, materials, and we went to metals and mining and said select that. And from here, you get a list of 19 stocks back, okay? Now, one thing I also want to address before we do our first trade example is, but how do we, for example, put that on the Marketwatch? Well, go to setup again. That's not bad. We did that before, right? Setup, open shared item. Okay, so not just like we did before. And then now what we're going to do is just go copy that link in right there. Now what you're going to see in this case is, and I put that in the chat again, we're going to go preview. And if I go preview, now what you're going to say is, what do you want to call it? What do we want to call it is meaning that we're going to try to find it, but also it's going to be what we have the label on the column as. Okay? Now, who's here? I'm going to call it Debbie CAHOLD. Okay? Debbie's a special person. Okay? Debbie, don't be so humble. Now, what I'm going to go ahead and do is I can click import. Where to go? Well, we're going to right click on any of these headings. Right click. We're going to go to customize. What are we customizing? We're customizing the column headings. So you can see the information that you want to see. Customize. Now, what do we call it? We called it Debbie CAHOLD. And on the left-hand side, I can even search for it. And I can just say Debbie CAHOLD right there and then add that. Now, where's it go? It's right there. All right, so that wasn't that bad. And now just go to okay. And Debunking CAHOLD is right there. Okay. Now, what you're now going to notice is we can just kind of also space those out how we want to see them as well. Now, why did I bring up, let's say, precious metals? Well, because, I mean, it wouldn't be too hard to actually see that there was a lot of bounce setups in that area, right? Based upon our discussion here today. So first off, what I'm going to do is let's go to the charts. And what I'm going to do is I'm going to look at an example like AEM. Just to start off, if I looked at, let's say, AEM, this has been a stock where if we look at this, now let's talk about timing for just a second, okay? So we've had red shading, which means sellers and sellers and more sellers, right? Today is day number 1 where the moving average has gone green, and we can see that. We also see that when you take a look at this, there is a green dot. What is that telling us? Well, what are the most recent lowest red candles? Oh, I can see them right here. 1, 2, 3. Which of those 3 were the lowest? It's really that one I'm pointing at right there. So if we're trading above that, to hold. If we're set to close above that in the last 90 minutes of the trading day, close above the high of the low day. Now, remember we talked about where investors might set a stop? They might set a stop right at the open of today's candle. And they might set that stop 2 to 3% below there. Some traders that like to trade moving averages might say, James, I like to set my stop below the moving average. That way, if it were to come back and try to bounce off that, I'm giving some room, okay? Now, trade number 1, what I'm going to do here is I'm going to right-click on this, buy custom, and I'm going to go with OCO bracket. Now, that bracket just means that we're getting in, we have a stop, and then we also want to put a target. Now, just for time's sake, if we said, well, what might be a potential target? Well, this 225, that prior high, some investors might say, James, if we go to that area, I want to sell, okay? I want to sell and I want to go out to lunch or a restaurant, dinner, whatever, with a friend of mine. Ooh, yeah, interesting, okay? Now, if the investor said, look, I want to set the stop below that moving average, well, that moving average is at 196.60. If we take less 2%, it's going to be a stop of 192.66. 192.66. And I'm going to go data GTC. So our trade example here today, using what we talked about, looking at the trend column to see is the price above the moving average. Second, looking for bounces. And if you looked at any of the sectors or prices that we talked about, and you did your routine for the day, and you looked at those lists, there's quite a few that are in that area. Now, we don't know if they're going to go up indefinitely or at all. That's why the investor is position sizing and setting a stop. Now, as a homework assignment, number 1, I want you to make sure that you have that CAHOLD dot on your chart. Number 2, I want to make sure that you have that CAHOLD right on your Marketwatch. Practice actually checking to see, can you see those bounces without someone telling you? Third, I want you to go back and look at the last 5 or 7 entries you had. And with these CAHOLD bubbles here, I want you to really identify what day did you get in, okay? I want you to look at that and do some self-reflection. Am I on time? Am I late? Where am I? Now, I also want to kind of make mention if you said, James, where do I actually see these classes? Well, number 1 is this is not a one-off class. So the one thing is if you went to YouTube and you just search for Trader Talk Schwab Coaching Webcast, we send all our videos out via YouTube, okay? When you subscribe, which is simple, it's free, all you got to actually do is just click on subscribe in the middle of your page if you have not subscribed already. Now, the big thing about this is if you said, James, I would like to really learn about different topics, as you subscribe, you can click on the search and search for topics that you would like to learn about. and it goes over our page here and then tries to find those topics that we've already taught about that you could watch just on your own time, on demand. If you also said, hey, James, I would also like to see a playlist from this class, check out that playlist right here. This is going to go back and look at different classes that we did over time, okay? So thank you so much for attending today's session. We got Cameron May coming up next. Thanks to Michael Fairborn also in the chat as well. And feel free to also follow us right on X as well. That way you can see content that we actually post when we're not teaching. So take a look at that as well. Now remember, with what we discussed here today, it was done for example, illustrative purposes only. Also remember that all investing has risk. And today's class has been mastering the bounce trade with using CAHOLD and CHE on the chart and the Marketwatch. Stay tuned for Cameron May coming up next.